What's up, guys? Just wanted to give a quick shout out to today's sponsor, Aptos. We'll hear more about how Bitcoin DeFi and Aptos is heating up later today, but for now, let's get into the episode. Nothing said on 0x Research is a recommendation to buy or sell securities or tokens. This podcast is for informational purposes only, and any views expressed by anyone on the show are solely our opinions, not financial advice. Bocc, Ryan, and our guests may hold positions in the companies, funds, or projects discussed. What's up, guys? Welcome back to 0x Research. I am waiting for Ryan Connor as well, but we're joined by, as you can see, MacBrennan today to talk about Project Zero. Maybe, MacBrennan, until Ryan gets here, because I know he wants to talk to you a lot. I don't want to take any time off. Do a lot of people ask you about your thoughts on the market? Is this something you do a lot, or do you want to chat about?
No, not really. Like, I'm not
a big markets guy.
Giving directional advice is like the hardest job in the world. So yeah, I stay away from it.
That makes sense. I guess, do you want to talk a bit about, I don't know, how Solana's been going? Are you happy that you guys have been focused there still?
Yeah, I mean, I remain more bullish on. I think actually. So what is Solana's FTV now? It's something like 80 billion or something, I guess, right?
Yeah, probably. 80 billion.
All right. So, and it made like 2.5 billion last year or something like that. So like the multiple is just compressing right now. So it's like everyone says you can't do value investing in crypto, but I beg to differ. And then like obviously like that sort of is not accounting for application revenue as well. Like I would expect like Solana to just, as more capacity opens up, for margins to get lower and lower for validators. But yeah, that 2 billion number, again, it doesn't even account for like apps like Pump Fun or, you know, these massive apps that are just completely destroying it, you know? So, yeah.
Ryan, you'll enjoy this. MacBrennan is also a Solana bull based on the valuation, so this will be good for you.
Yeah, it's a good multiple right now. If indeed we're at like an 80 billion FDV with 2 billion in revenue last year. Yeah,
I'm a little worried about revenue though going forward with BAM.
That's what I was just saying. Yeah, I expect as more capacity opens up, I expect validators to make less money from the chain itself, but that is not including what I was like just saying, application revenue, which will also start to go to validators in some forms. So that $2 billion number totally excludes, like right when you hopped on, I was saying like Pump Fun and like these massive applications that are just wrecking. So I expect value capture to happen a little bit there as well.
Okay. Ryan.
Anyway, good to meet you, man. I don't think we met before.
Yeah, great to meet you as well.
I often do talk valuation with folks before I introduce myself, so that's right on message.
Sweet.
You were with MarginFi as well, right?
Yeah, so I co-founded MarginFi. I co-founded Margin Research.
Cool.
I co-founded Temporal. And
really?
I founded Project Zero. Yeah.
We just had.
Yeah, you just had Ben on. It's my boy. Yeah.
I guess I never put those two. That makes sense because I know I've seen you post about Temporal. And also, Ben is clearly involved. Yeah. Wow, you're very, very deep into Solana. Some might even say part of the cabal on Solana. Like a very, very deep state Solana.
Yeah, I'm in the weeds for sure. I'm not. I will. I'm not involved with with Temporal. Like I'm not active there now. I'm very good friends with everyone on that team. And I saw it from the start and everything those guys got to work on. But yeah, I'm fully behind Project Zero right now.
Yeah. And that's a great way to go into this. So do you want to give it like a quick introduction on what you guys are building over at Project Zero?
Yeah. So DeFi has hit this inflection point. There are teams now that have won their or are winning their corners of the market. And risk models have evolved. Program security has evolved. Like I can confidently tell you right now that Aave isn't going anywhere. Camino isn't going anywhere. Hyperliquid is like really exciting, isn't going anywhere. And so given this, as a DeFi user, you're naturally going to have your capital across like these venues, you know, for different reasons. Like you trade perps on a perps exchange, you do some like credit stuff on credit market, maybe some interest rate derivative stuff on like Exponent, you know, etc. And that you have capital fragmentation. And so the minute you're using more than one venue, really like the second you're using 2+ venues, you actually have inherently a need for a prime broker. You have a need to be able to now borrow against your whole portfolio. And especially if you have like this like more complex portfolio configuration where perhaps you're actually like levered long on venue A and levered short on venue B, you'd get better borrowing ability with like the addition of a prime broker. So that's what Project Zero is. Project Zero like allows you to use the venues you love using for the reasons you're using them, and gives you better risk, better rates, better capital efficiency, better UX across them. And the super cool thing here is that like whenever you say prime broker, like in traditional finance, that is exclusively reserved for the big boys. Like that's for the hedge funds, that's for, you know, the super high net worth individuals. That is not for, you know, your typical guy on Robinhood. Like he's never going to get a prime broker. But in DeFi, that's not the case. In DeFi, anyone can sort of access P0, which is sort of like one of the original cool promises of DeFi, where there's not only this like decentralization, there's also this democratization. And so now like anyone has access to this tooling that previously was just reserved for, you know, the hedge funds and the rich guys. So I think that part that's very fulfilling to me as well. Like when I'm working on this.
That sounds cool. What is it? I guess like the TradFi comp, what does it look like to build a prime brokerage in DeFi versus in TradFi? Like what are some nuances that you have to be very careful with?
It's an extreme test of risk management, essentially. So as it is in traditional finance as well, like some of the biggest prime brokers in traditional finance, it's like these bulge bracket banks. It's like Morgan Stanley, Goldman Sachs, et cetera. However, like when you go back to like FTX era, one big prime broker was Barry Silbert and crew, essentially, and you know they ran into some like massive risk issues when a bunch of bad debt was spreading, a bunch of contagion was happening post FTX fallout. And so that sort of like exposed the big hole in off-chain prime brokerage, where you're essentially underwriting the credit against like these independent third-party venues. And when you're doing that off-chain, you have no verifiability. Like if the venue tells you it has like 100 million and it's good for it, maybe you can borrow, you know, 60 million against it, but it's still kind of like a trust me bro when it's off chain. And so the cool thing is P0 is completely on chain. So we can, you know, real time verify that, you know, each of the venues that we're integrating are solvent. And so that's like a big difference as well, with like our model versus if you were doing this off chain.
That makes sense. One thing I want to ask is, so Solana, okay, primarily, will you guys be marketing, or I guess like focusing on perps products or any trading venue?
Yeah. Yeah, we'll integrate. Like, I'm excited to integrate Drift Perps. I'm excited to integrate Hyperliquid Perps. I think there's some new Perps players coming on the market soon that I'm very excited about integrating. And what that'll actually do is, for the first time, open up this multi-venue basis trade where you can like long the asset, deposit, earn the yield on like Camino, short the perp on like Drift, and then lever that up. And you can do that capital efficiently, which also has not been possible previously. So right now we're doing like that, but for spot. So we have multiple spot credit markets live. And so we're opening up these trades that were previously impossible. Like a trade people are doing right now is like they're longing a incentivized asset on Camino that's yielding, like 10% plus, or last I checked. And they're borrowing an asset against that collateral on P0. That's like the borrow rate is like 6%, and they're levering that up. That was previously impossible, right? Like if you deposit into Camino, you now have a spread. Now you're going to borrow at a higher rate, just isolated to Camino. So there's like some really cool flywheels here where we're directing a lot of like liquidity to any integrated venue. And then we're opening up these basis trades, rate arbs, carry trades, essentially at the start, against all of them.
Yeah, and I assume like dealing with a lot of these decks, perps decks is like across different chains. You're gonna get a lot of funding rate dislocations across them, right?
Yeah. Perps is like its own animal. So, and also like from the POV of like risk management, your risk engine levels up dramatically the minute you start having like access to perps and collateral against or any sort of derivative. So we're really focused right now on getting first like 100% coverage of credit markets on Solana, and like really refining, like our risk engine will never be done, but like really refining our risk engine against these spot products before we start adding on derivative, like direct integrations to derivative products on top of that, because then we start dealing with like a bunch of like really complex Greek stuff, and I want to be like fully prepared on the spot side before we shift our focus to that.
I'm curious if you take on any risk with these bridges, especially if you're like integrating Hyperliquid.
Yeah. So if we had Hyperliquid live like recently, we would have like taken on a ton of risk essentially when they paused their bridge for however long. Now you can build redundancy around this. So we have no like cross-chain integrations live now, but if we were to integrate something cross-chain, like we wouldn't have a single point of failure at the bridge. Like we would probably build like our own messaging layer outside of the bridge that, is housed on our own infrastructure. And we take this approach with everything. We have massive redundancy with liquidators, massive redundancy with like oracles and pricing systems, etc. So the same would be true for bridging infrastructure. So that's not to say that because Hyperliquid paused their chain, we just wouldn't be able to operate, but it would like add definitely a lot of complexity. So, when we do eventually make, our first cross-chain integration, it'll definitely be on top of extremely robust, redundant bridging infrastructure that has been live for, a while.
I presume this means some form of layer 0 integration, but we don't have to chat too much about that.
No, layer 0, wormhole. I mean, kind of all the above. Yeah.
Ryan, you've recently been increasingly interested in prime brokerages. Do you want to?
Yeah, I think it's a big gap in the market. We've been talking about it for a bunch of years. Like, why is the time now, right? Like this has been tried. Sorry, there's been like a lot of cold starts. Like why is the time now?
Yeah, the time is now because previously risk engines were not nearly as sophisticated as they are now across DeFi. Smart contract risk was not to the level it was now across DeFi. And also there wasn't a lot of winners. Like it was very, like if you were a DeFi team and you lasted more than 1 year, you were doing great, historically. Again, like those, like all those variables have now changed. There's teams I know that are going to be here next year. There's risk engines across these teams that have proven to be to withhold a host of market conditions and market events. And so now you can sort of make the levered bet on them, which is like what we're essentially do. Every integration we make is like essentially we're saying, okay, we've validated the market risk with this particular venue, and we're comfortable, spending 2 months like building out really, particular integration tooling around this to open up like credit against this venue. So all those things were not true like 2 years ago.
One thing you mentioned, the smart contracts. I guess like what would happen if one of the lending venues that you guys are using has bad debt? Would that affect project?
Yeah. So if an integrated venue that we have live were to have some sort of socialization event, that would also impact our credit proportionate to the amount of collateral we have on that particular venue, essentially. So we've done this right now. What it would do is it would kind of impact the whole credit pool. So like if there's $100 million on Camino, and Camino has to mark down their assets by like 20%, and there's $100 million on Camino through P0, then yeah, that $20 million socialization would sort of like be spread across the entire credit pool on P0. What we're looking to sort of shift to is to focus that socialization per venue. So really to only affect the people that chose to use that venue on P0 disproportionately to all the other like people that are using different venues on P0. And that's something we'll definitely do. That's very achievable. We're just sort of in V1 right now, which is where it's equally spread across the credit pool. So that's why like we're very particular on the venues we integrate.
Yeah. So it's just Camino right now, but I assume you're going to integrate essentially every lender in Solana and then add on EVM, right?
So it's Camino and the Project Zero market itself, which already opens up like a incredible amount of like differentiated trades. And the Project Zero market has like $250 million of liquidity in it, and like 100 million of that is borrowed. And we have like 200 million more across like other systems of ours. So we're the largest decentralized prime broker in crypto right now. And we've also been like one of the fastest, if not the fastest growing DeFi app on Solana. We've been averaging over 1 million per day of inflows since launch, which was in September. But yeah, it's just Camino right now. To your point, we'll first get 100% credit coverage of all Solana lending venues. So Drift and Save are audited, and essentially we're just working on and done. And we're just working on the application rollout with that. And then soon after we'll go live with Jupiter Lend and Loopscale. And then we'll kind of be there. Like that's pretty much 100% market coverage. And then we'll start to shift to derivative products. Like we'll start to integrate perp markets. And I also like, I'm massively bullish on like interest rate derivative markets as well. So I'd like to see more direct integrations to those as well.
Oh, like rate X, exponent, maybe pendulum.
Yep. Yeah, exactly.
Yeah. One concern I've had is like Solana hasn't been able to come up with this perpetuals protocol yet. Like Drift is good, but it's just like it seems like Hyperliquid and Lighter are kind of doing very, very well. So
yeah,
I'm happy that you guys are like not pigeonholing into Solana, and you're like, we'll just do it like across because it makes the most sense.
Yeah, we can go anywhere. That being said, I am so I've been very close to a lot of like perp teams on Solana and a lot of just like market microstructure stuff. And I am very optimistic on the state of like Solana perps like in 2026 essentially. So yeah, this game isn't won yet, I would say, but yeah, we can definitely. Hyperliquid is a fantastic product. and Lighter's killing it right now. And so respect to both those teams, we can definitely integrate them. It's just like those two, the sad part is like Hyperliquid, like I don't even think there is a direct bridge between Solana and Hyperliquid. Like we'd have to go to Arbitrum and then to Hyperliquid. And Lighter's also on this like custom ZK roll-up thing. So that's like the sad part where like it is like that's more risk and more work for us. And I would like to just see more history with these things first so that we can hedge against things that happened. What was it like yesterday with Hyperliquid? But yeah, they're great products. So we got to go where there's user demand, and there's definitely user demand there.
And I think that makes sense. And when you say 2026, you expect a big year for Perps. Is that just with new launches coming up, or is it, from what I understand, is like BAM is meant to help these products out, or why?
Yeah, so there's a lot of innovation happening at the like Solana client level, which like BAM, like what the Harmonic guys are doing, and et cetera, and a lot of competition there as well. Anza as well. So the brain power between Jito team, you know, the Tempo guys, and Anza is great. Like the fact that they're all sort of going after this is just going to end up in a really good outcome. So, and that will give a lot of optionality to applications, which will be great, which should like tighten spreads. And if it doesn't, it's a failure essentially. And then, like we've seen the emergence. So then we got like teams like new teams like Bocc. There's other new teams that haven't been announced. We have like Drift V3, and Drift V3 seems to be, as I look, prioritizing prop AMM makers as well, which is really cool. Really cool. I am a big believer in prop AMMs being applicable to perps, not just spot as well. So we've seen what prop AMMs have done with spot, and sort of like just completely changing. For the first time ever, you can get better prices on chain than you can get on Binance with prop AMMs with spot. And so the combination of like those variables I just threw at you, I think is extremely optimistic for Solana in 2026 with perps. So, so yeah, I wouldn't, again, respect to Hyperliquid and Lighter, but I do think, I think people might be underestimating how important this is for Solana.
Bitcoin DeFi is heating up on Aptos. With nearly 400 million BTC assets on chain, Aptos users can now earn yield on their Bitcoin via Eco aBTC and OKX xBTC without the typical bridge risks and high fees. To explore BTC yield opportunities on Aptos, follow the link in today's show notes.
Could I ask more about prop AMMs and your views, just given how deep you are in Solana ecosystem? Yeah, like, I mean, what do you think about passive liquidity on Solana going forward? You have to assume that these prop AMMs are going to eat more and more of the market, just given the success that they've had. Like,
yes,
is there a place for the old models on Solana?
Yeah, that's a great question. So the hedged version of this is like, oh, let's just have a composable order book and prop AMM, and we'll have like these prop AMMs like fighting close to, you know, the spread, and then we'll have like these more passive quotes across the edges of the order book to fill in depth. But saying that, and this is also on the back of, I'm very good friends with like KV over the temporal side, and I was talking with him about prop AMMs recently. So some of this thinking is shared between him and I. It's not just me exclusively coming up with these ideas. I think people underestimate the depth of prop AMMs and how quickly they can update if like a big order comes in. So everyone keeps saying we need these order books because, you know, if someone wants to slam a $10 million order, they're going to need to eat into the order book a little bit. But if that in practice happens with the state of even today's prop AMMs on spot, and these prop AMMs have access to adequate inventory, they can update so fast that they could just eat that all up. And I think people are underestimating that fact. So I think that like a prop AMM alone could potentially just handle 80%, 90% plus of like all trading needs. And people can try with order books, and also from like my point of view. So I'm coming at this as someone who is offering credit against multiple, it's like from the P0 perspective. And when we're on these permissionless systems, like we're talking about like liquidations, which are automatic, permissionless, and like I need a good idea of market depth to manage solvency. Like if I'm offering credit against like if I'm offering the ability to borrow $100 million against a particular asset, and that asset needs to then be immediately liquidated, I need to be able to sell big chunks of that asset on the market, and liquidators need to be able to protect solvency fast. And so historically for me, it's been great if you just put that in like a constant product AMM, and I can just be like, okay, cool, there's like $5 million of liquidity here. I know exactly how this models if a big like sell buy or sell comes in. It gets much more harder with prop AMMs because like their depth isn't really representative of how much they could swallow up when you're like looking like, oh, this prop AMM only has like 30K in it. Like, no, it could probably actually eat up like 150K of like sell pressure immediately. So that part is going to be more of a headache for me. But hey, that means like DeFi is evolving. So that's cool. Yeah. I gave you a really long answer. I'm very bullish on prop AMMs. I think they can be used for perps, and I think that market structure could just like almost entirely shift to them with safety measures in place across AMMs and order books. Like I think Sanctum is really great. Like look at what Sanctum has done for Solana LSTs. They just put this big pot of like SOL and LST liquidity in one place. It's easy to model, and Camino and P0 and Drift, and we can underwrite like tons of credit against LSTs now because of that. I'd love to see the same for like Bitcoin products. I'd love to see the same for ETH products. I'd love to see the same for stablecoin products. And so that's also totally agnostic to a prop AMM or an order book. That's just like kind of like, I think AMMs are like really important for those types of products. But yeah, I think we could see this power law with AMMs and then prop AMMs essentially. And then order books are kind of like this weird middle child.
The one thing is, Ben also said this. One thing that was in my mind is then you never let price discovery happen on Solana, right? Because you're only getting price feeds from Binance.
Well, that would be like saying that. So all these prop AMMs are reliant on like this internal oracle, right? That's saying that like you would have no pricing alpha with your oracle, which I don't think is. I think like a lot of these guys are capable of figuring out where prices should be and updating their oracle accordingly, and then price discovery is once again happening. Yeah. And now it's happening on chain instead of on Binance. So we're not just reading off of Binance and updating prices. Now we've actually finally, for the first time, like this is also like the biggest dream for forever that has never come true. Now like price discovery is actually happening on like these prop AMMs fighting on Solana, which would be incredible. Yeah.
That makes sense. MacBrennan, I have two more questions and then we can wrap things up. The first one is moving away from MarginFi into Project Zero. I can see a clear, like, we're doing lending. Why not do it at a much larger scale and much more ingrained scale? But what's the story like over there?
Yeah, I mean, so yeah, I was part of the MarginFi team. It was like the fastest growing DeFi product of 2023. And then, my co-founder had a very bad day, crashed out, and he destroyed a lot of trust, like in a very short amount of time. And, that was really disappointing to me. That was disappointing to like all the people on the team that had put in a lot of time and effort into making this like a really successful product. And the easiest thing I could have done in that situation is just be like, okay, I don't want to deal with this anymore. I'm going to, take this really, really talented team and go do something else. But I decided, not to do that. And we still saw, this massive problem with capital fragmentation on Solana. So I was like, okay, let's like rebuild this from the ground up with this like really talented team and build something like net new. And so, and the nature of doing that, like I had to do that sort of like behind the scenes. I couldn't give a lot of like meaningful updates. It took like about a year to do this, to get to that, you know, the point in essentially September, which is 2 months ago, to be able to launch it. But I felt a deep, like, I felt a deep respect to our user base, a deep respect to our stakeholders, and a deep respect to our team. And I knew we were very capable of this. So that sort of marked that transition. In doing so, yeah, I also, like, MarginFi was in a rough spot. If we didn't make any big changes, the company would have went bankrupt. So that's when, with Ben, with Jacob, founded Temporal, MarginFi and Temporal worked very closely together to like essentially save MarginFi from bankruptcy. Lots of like sleepless nights, but that, all that sort of got us to the point where we could take a stab at on-chain prime brokerage. So I've learned a lot from it. I've grown a lot from it. I deeply love the people I got to work with during it all, inclusive of Ben, who you had on, inclusive of Jacob, KV, guys on the Temporal side, and then a bunch of guys on the Margin side as well. Adam and John and Abdul, etc. And then like our investors, which would be Multicoin and Pantera and Solana Ventures. All that together really held the ship together. And now, yeah, we're on this like really exciting new chapter, and we're one of the fastest growing teams in Solana DeFi. And yeah, we know very well what we're capable of doing. So that was the story there. That's the lore. Yeah,
it's good lore.
Yeah,
it's very good. Okay, just to end things off, what does the next 6 to 12 months look like for you guys, and what do you think people who listen to the pod, listen to the live stream, should be doing with regard to Project Zero?
Yeah. So the next 6 months involves wrapping. Like we'll be fully wrapped within 6 months. We'll be hopefully have our first like derivative market live at the end of 6 months. We'll be fully wrapped with credit markets on Solana. We'll have 100% coverage. So if you're coming to Solana and you're using lending programs, you should get a more capital efficient, risk aware experience through Project Zero. You should get better risk, better rates, better capital efficiency, better UX through Project Zero if you're using lending markets on Solana at the end of the 6 months. And if you're not, we're doing something wrong, and you should DM me and I should fix that. And that again is like, and what that will do as well, it'll be this really cool efficiency flywheel to all our integrated venues. So what should happen also is that rates per asset should adjust to their risk adjusted return per venue, meaning like maybe USDC on Camino, it's super safe and it's at 5%, and on Drift there's like a little bit extra risk, and so it's up at like 6%. And then all of these different like rate differences across venues can immediately get arbed capital efficiently to their risk adjusted level. So that flywheel should like happen. Solana credit markets should become like super efficient. I'm excited about that. And then, yeah, we should be live or close to within 6 months, certainly. We should be live with like our first derivative integration, probably perp market. And then I'd also love to have like some interest rate markets also live. So those two things. Also at Breakpoint, I will be talking, so Breakpoint's next month, Breakpoint's in like essentially exactly a month from now. I will be talking about the Project Zero token and how we're thinking about like that whole, all that. And we're very focused on getting a token live before derivative markets, because we see derivative markets being essentially our biggest opportunity for growth. So this way we're not like launching a token at the top. And also it's fantastic now, like markets are down. And so like, this is a great time, I think, to get a token out. So I will be talking about the token. at breakpoint. I have like a talk at breakpoint, and I want to get that live before our derivative markets start to go live. So that's 6 months. I think that's about as, those are some big things. So yeah.
That's very exciting. I guess because you brought up the token, now I feel like I have to ask this kind of. In terms of how does the prime brokerage's, I guess, business model work? I'm not particularly do you just clip on fees? Do you clip on interest, paid interest, like borrow interest? How does this work out?
Yeah. It's pretty multifaceted. So there is inherently like these spreads associated with offering credit, and increasingly differentiated spreads per asset based on its riskiness, which introduces the ability to capture additional fees, essentially. So that's one fee source, is just inherently spreads. Another fee source actually that a lot of people disregard is order flow as well. So like we should be a big generator of differentiated, unique like liquidations. We should be a big originator of like collateral swap options and interest rate and like, especially as we see the maturation of interest rate derivative markets, a lot of like the interest rate moves that'll happen on P0 will directly impact them. And so like this order flow is actually very meaningful. It's different than order flow when you think of like Jupiter or like Titan or DFlow. It's completely different. So like that's its own sort of order flow segment, and we would be like a very differentiated order flow segment. But also with liquidations, that also is like, every time someone liquidates on Project Zero, the program captures a fee on that. And liquidations are open to anyone. Any profit motivated actor can come in and liquidate. So those are some bigger areas. And then finally, like we have a world-class application team at P0, and we have some differentiated apps that will also go live. One of which before breakpoint as well, so within the next month, that introduce like its own fee capture. So like a good example of that is like our strategies page that we recently launched, where we sort of surface like these differentiated interest rate arbs and carry trades that you can only capture on P0. And many of these, we just show the spread right now. We're about to update it actually, but with leverage, it's like 20% plus yields on assets you're already holding. And so any sort of like automation or point and click functionality on the application side, that's very valuable to users, and users will like pay a few bips for interacting with that. So that's something we want to double down on as well. I'm very much like of the thought camp that programs like DeFi programs in any sort of like sufficiently competitive market, fees should compress meaningfully. Like programs themselves should not be able to capture a ton of fees. And a lot of the fee capture should happen at the application side, is where you have like this exclusive relationship with the end user, and you can offer like really great tooling around what the DeFi program provides. So that's how I think about things.
I think that's the general Solana thought process, and it opens up like, how will Solana generate revenue going forward? Is there like a rent thing for you guys, for example? So it's
well, it'll be the same thing. Like in like an app, someone using a perp trading app will like, I want my order to be prioritized, and so they will pay a fee to the application, and the application may share that fee with like a validator, for example. And so that is something that currently the Solana program isn't set up to capture. But that will be like inherent value to the SOL token itself, essentially, for using this, shared database, essentially. Yeah.
Yeah, that makes sense. Ryan, anything you want to ask, or no? We're good. MacBrennan, I thank you for coming on. This was very, very
Thanks for
interesting.
Having me. Yeah.
Do you want to? I guess like people should follow Project Zero. We'll put this in the show notes, as well as MacBrennan CC, who does not do as many shirtless live streams anymore. Which
yeah, that was like peak bear market 22, essentially, where I was like, all right, well, that was a different time. That was when everyone was considering leaving the industry. And I was like, all right, well, what's the worst that can happen?
Yeah. Very good. All right.
Yeah.
Have a good day.
Yeah, you too. See you guys.
Bro.
It's just you and me now, Ryan. Can we talk about the
Okay,
markets a little bit? And then Ian's going to come on and I'll let you go. But I sold
Yeah,
this morning and I think I messed up. What do you think?
I mean, today's the bottom, so that really sucks for you. I hope you didn't sell too much.
No, I did. I did sell quite a bit. For context, I messaged Ryan this morning, European time, and I presume it was like 4 a.m. for him, and he was like, "Why do you always sell the fucking bottom?" So I don't know. We're gonna see what happens.
True story.
I'm happy you came on this pod because I think it incorporates like 3 of your favorite things, which is prime brokerages, perps on Solana, and also how can Solana make revenue going forward. And I didn't know this like applications can pay a fee thing was a thing that they're thinking about. Imagine if MacBrennan's talking about it. This is something they're quite actively thinking about.
There are a lot of uncertainties, I think, in Solana land, but there's also a lot of things to be very excited about. I think one of my big failures of 25 was just assuming that it would look a lot like 24, but things are so rapidly changing in Solana land that it's hard to get a handle on it. I think 26 is going to be really exciting, and I'm looking forward to seeing how the chips fall. I don't know what's going to happen. I really don't know, but the ecosystem has so much momentum. It's like I said in the beginning of the call, like I'm a little worried about the monetization thing. But I think Hyperliquid is proof that and Solana in 23, 24 was proof that if you kick the fee low enough, you can really offset in volumes and make up for that. So, I'm optimistic.
Yeah, one thing that kind of has put me in the same boat in terms of I don't know what the hell is gonna happen in 2026. There's our Solana guy coming in. I don't know what the hell is gonna happen in 2026 is purely because in my mind the landscape was very clearly Jiro beforehand. It's okay, Jiro controls majority of how Solana value flows through. But if they're bringing in these what the temporal guys are building, Harmonic, as well as clearly AMMs is much more competitive than it used to be. I don't know what's going to happen with Fire Dancer still. I have no idea where that development is going. But it's going to be kind of a weird 2026. Ian, you're a validator, a part of the Solana cabal. What are your thoughts on what's happening in 2026? You need to unmute, by the way. I don't know if you know this. Can you hear me? I don't think you can hear me.
Yeah. I think you guys are right. I mean, it's kind of anyone's game for the next year. I can hear you. You can't hear me?
You're very delayed.
Sorry, I think the audio is messed up on my end. I think the audio is...
That's it. That's it from him.
No.
I removed them.
Yeah.
They'll fix stuff up and come back.
That was the most impressive delay. I've
Yeah.
never experienced such a long delay on a call before.
He just looked right back at me. I'm going to try him again. Are we ready? Hey, Ian, can you hear us now?
Yeah. Sorry, I can hear you. I had it playing through Twitter, and so there was a delay on my end. I was I think I was I didn't have the actually live audio. I had the Twitter audio. But yeah, no, sorry. You guys are right. It's everyone's game for next year. You can hear me now, though, right?
Sorry, keep going. Yeah. Yes, we can hear you now. There was trouble syncing state across nodes.
Yeah. We IBRL'd that though, right? Right, Boccaccio? But anyways, for next year, I think it's great. There's tons of competition over there now. I think one of Mac's points was it's going to result in just like better outcomes no matter what, because you've got like a bunch of smart teams working towards like, you know, the actual like the best user outcome, which I think is great. So quite happy about that. And yeah, I think if you like start looking at like the judo guys, like they're definitely like locked back in now, because like there's a lot more competition than they've ever faced. And like props to like the Agave team as well, because like they stepped it up when Financer came in. But yeah, I mean, it's looking really positive. So yeah, I think it should be a good next year.
Have you looked into these new perps protocols, Ryan? Have you like bulk trade, etc.? Kind of, right? Ian, did you?
I mean, we chatted with like Bocc earlier this week, but I don't fully understand their architecture yet. But essentially, my takeaway is like they're going to be able to be running perps on Solana with like 20 millisecond latency, and so like that's really good, because I mean, even on like the fastest like SVM implementation we'll see with Fogo, which is like 40 milliseconds, they're going to be doing half of that on like a chain with already existing distribution. And the guys who are building it themselves, like they understand like trading quite well. Like apparently they were doing like market making prior to this, and like now they're building their own platform. So that's quite cool to see. But yeah, that's like the one thing Solana has not cracked yet, to be fair, is like the perps trading. So obviously like BAM can help people build out like a better like perps trading experience over there, but I don't know if BAM can solve like the latency in the same way. So it seems like Bocc is kind of going after like the timing game there. So yeah, hopefully it's a great product and hopefully people use it. But yeah.
Ian, I have a question. Will BAM enable Hyperliquid like performance, or will it not?
I mean, I think like in terms of ordering and stuff like that, it'll be closer to what you see, but I don't think like you're still going to be subject to network latency, right? And so I think Hyperliquid is, to correct me if I'm wrong, Bocc, but I think it's like 80 to 100 millisecond blocks, right?
Yeah,
and so
but
like,
it's like being lowered on testnet quite drastically. It's at like 50 milliseconds on testnet.
that's really good. So Solana right now is like 400 milliseconds, I believe. And that it's like an existing issue right now in Solana to try to make sure that people are not like slot lagging either. Like trying to get blocks to be faster is kind of an issue, because a lot of the larger validators realized if you make your blocks go longer, then you can produce more profitable blocks. Which is like, you know, it's like it was a timing game thing on Ethereum for a while. It kind of got labeled as that, like the EF research cabal. And then people realize you can do the same on Solana. So it's a little hard to crack down on that from like the protocol level itself. Like obviously, if you're a stake pool, you can blacklist validators that are doing that. But I think it's going to come down to like what's really going to make Solana competitive with Hyperliquid from like the perps trading standpoint is always going to be like that networking latency, like how fast are the blocks produced. And like, I think naturally you're also seeing the Solana validator count continue to shrink. Like when we joined the set, there was 1,300 validators. Now there's 860. And that probably continues to shrink as the Solana Foundation like claws back a lot more of their delegation. So that will end up with a lot of the validators probably being, you know, like located in the same data centers. But obviously like it's pretty hard to drop block times meaningfully to compete with Solana in that way. So I think Bocc might be like the most viable solution to compete with like Hyperliquid in that sense. But Hyperliquid also has like a massive lead now in terms of all the distribution they have, all the users. There's this really crazy dashboard that came out, and like one of the things on that was how often or like what percent of users are coming through like the builder codes. And it's some like ridiculous percentage. I think it's like 60% of like all users right now are coming through those builder codes, which is like the ASXN dashboard. So I'll probably share that on Twitter or something. But yeah, really, really crazy lead that they have over there. But yeah,
that is insane. I saw that as well. The 60% coming from builder. I mean, that's just. I wonder if Bocc is a network extension, by the way, or do you know if they're building directly on Solana? Because to me, like 16 milliseconds latency directly on Solana seems impossible.
Yeah, I need to dig into like their docs again. Like I didn't really get it first time around, but it sounds like it's more some sort of sidecar implementation. But the cool part is like they're also going to have like their own like agave fork, and then the validators are paid in stablecoins, which is pretty cool. So like you'll be able to get additional yield there, and it'll be in stablecoins. So I think like that'll be pretty attractive for getting some stake there. But yeah, I also don't know. I don't know what like percentage of stake they would need for the network to function in like the most optimal way. But yeah, I think that's definitely one to like watch.
Yeah. I guess like my last thing here is with regard to how you said like perp dexes have never been figured out. Ryan, I'm curious what you think here as well, but like it feels like every chain has something that they get really, really into. And it feels like Solana just got really into prop AMMs. Like all of the like really, really smart guys are just involved in prop AMMs now. And like on Ethereum, it's like whatever validators or decentralization or like cypherpunk stuff. But I'm wondering if that's kind of removing the like efforts going towards building out perps dexes. Although now it seems like Bocc and stuff is coming out, but on Monday we had on Tuesday we had Ben from Harmonic, and today MacBrennan. They were both like, oh, like we can use prop AMMs to do perps products. And I was like, well, why not just focus out on building out like a order book for perps products, right? Like that to me feels like something proven, something that's worked before, and then like just focusing on building that out to me makes a lot more sense. Any takes here? No takes.
Yeah, I mean, it seems like a lot of the Solana intellectual community is definitely one-shotted by prop AMMs.
Yeah,
some could say in the same way some people really like trains and other fun things like that. But I thought that was an interesting point. I haven't considered anything around that. I think that's more of Daniel Smith's alley. I think he's also quite interested in trains and prop AMMs, to my understanding.
He fucking loves prop AMMs. Carlos as well got one-shotted by prop AMMs. We do this newsletter every day. If anybody wants to subscribe, it's called the 0x Research Newsletter, daily market insights from the analyst team. And every time I read Carlos's piece, it's about prop AMMs. It's insane. I'm like, how can you keep writing about prop AMMs? And he fucking loves it.
I mean, I guess it is kind of like the only kind of new evolution we've seen of like on-chain trading on Solana right now. But yeah, I don't really understand like the prop AMM value prop there. So would like to learn more about that.
Yeah. Ryan, you unmuted.
I got to run.
It's
fun while it lasted.
It was fun while it lasted.
This was great, Ryan. We should do it again sometime.
It was really good seeing you both. I'll see you in the chat.
Very good.
Peace.
Right, removed and kicked. My favorite thing is to remove and kick people. Ian, I need you for 15 more minutes. But before that, I want to give a massive shout out to Aptos for sponsoring this stream. Aptos, Bitcoin DeFi is heating up on Aptos. With nearly $400 million in BTC assets on chain, Aptos users can now earn yield on their Bitcoin via Echo, aBTC, and xBTC without the typical bridge risks and high fees. Thanks again to Aptos for sponsoring today's stream. Thoughts? Let's not do this. But it was pretty good. I like my segue.
That was good. That was a really good segue.
I think so too. So Ian, you're not typically known as a trader, but I tried to ask MacBrennan his market thoughts, and he was like, I don't want to talk about this right now. I asked Ryan, and he was like, I don't really want to talk about this right now. I'm going to talk to you. What are your market thoughts right now?
That's what people are tuning in for. Yeah. I mean, yeah, I think the market's in a bit of a weird place. It's just been hard to actually get any sort of read on it since like 1010. Like market has just not really recovered since then. Everyone's just like cryptically talking about bodies floating to the surface, and it's like, okay, well, what exactly happened? We don't really know. Apparently, like some funds are still like, I don't know, waiting to I think there's like stuff we maybe shouldn't talk about, but I think in general it seems like it's an issue maybe outside of crypto's sphere, right? It kind of seems like a broader macro issue, like the fact that like Nvidia's down is also kind of obviously hurting everything. But yeah, I think like Sam Altman has been moving kind of weird. I think the AI people are moving pretty weird. I think people are starting to ask a lot of questions over there around like, you know, are these companies like appropriately valued? How does like OpenAI plan to IPO at like $1 trillion if they're doing like 1.6 billion ARR? Why is there no monthly economic data for the month of October? It's like kind of hard for like, I guess like investors outside of crypto to really kind of assess what's going on out there, because it seems like the US obviously went all in from a financial standpoint on crypto, not crypto, AI. And like the big idea there is like it's going to bring all these productivity gains. And meanwhile, like it's just everyone making like slop with AI for the most part. Like seems like that's like the largest consumer use of just like, you know, brain rot maxing. So
I don't know. One thing is like, yeah, Sam Altman's been moving pretty weird. This is the official term. And he's like, oh, like, you know, the taxpayers will fucking cover it. And it's like, okay, what are the taxpayers covering? It's like old people looking at their phone for 16 hours a day. And it's like, I swear to God, every time I see somebody in the metro, it's like somebody looking at this like woman jumping into the pool and like getting all the water out of it. And they're like, is this fucking real? It's like, yeah, Sam Altman's gonna make people pay for this as well. It's insane.
Maybe we should raise the prices on that if like that's like the main outcome. Maybe that will solve some of the slop. But yeah,
I also don't really understand how they monetize any of it. It seems like they want to do. It's just a really tough sell, right? Like you start off AI by saying, okay, we're gonna essentially solve like human capital problems. We're gonna make sure that everybody has like exceptional tooling and knowledge under their palm at all times at like record speed. And then it's like, okay, how are you going to monetize it? We're going to serve ads, personalized ads to people who are chatting to it. And also the main two use cases are slop and people falling in love with their chatbots and using it as like personal diaries, essentially. Ryan would be so upset if he was here. I'm glad he left before we started.
Yeah. I think it seems like the real use case there could be like health related things. Like all the like, I don't know. That seems like a harder. I have no edge over there either, though. I think like if you're trying to do like deep scientific research with it, I'm sure it's like helpful.
Yeah.
But also for like the most part, it seems like people are just using it for slop, using it for like coding, and like some of that coding is just like to code like some like slop app, like vibe coding obviously is like there's a lot of like just low effort things that have come to market. So yeah, I mean maybe they should like raise prices and see like how sticky like the users actually are, and like then maybe you get like some real stuff out of there. But I think back on the crypto side, despite like prices being down, it seems like directionally a lot of the tokens are moving towards the right thing in terms of actually starting to have like an idea of like, this is how the token makes money. This is like, we're going to use like the protocol money to do this. Like, obviously like Uniswap was like the one that everyone's been dogging for just like years now, because it's just been like, you know, it was like the first big DeFi coin and it was just like cucked for so long. So it's nice to kind of actually see some progress over there. Lido came out with like their fee switch, like that's all cool. And like meanwhile, like the protocols that just started doing buybacks from like day one, I think those will probably be the ones that are going to like actually end up outperforming like going forward. So like whenever we get some sort of recovery, I'm sure like Hype probably rebounds pretty fast. Pump probably rebounds pretty fast. Like Pump is like now they bought back like 11% of their circulating supply.
I sold Pump today in the morning.
I mean, how's their revenue doing, by the way? Like they every time I check it, it's like they're still somehow making like, you know,
exactly what I was going to say.
Millions. Yeah.
Every time somebody brings up Pump, they're like, how the fuck is Pump still making $1 million a day? And it just like, it's one of two things, right? First of all, I think that Pump's revenues are legit, but there's always like two thoughts that pop into your mind. One is like, okay, I have no idea what this market actually wants and looks like.
Yeah.
Like there's clearly strong demand for this one product that I just generally don't understand. And the second thing is like, okay, they're cooking the books, but they're not cooking the books, because if they're cooking the books, it's a horrible look for them. Like they're using raised cash to buy back, which either way is fine because they're just buying back 11% of the token. But clearly, these guys are just, there's this market of crypto traders still out there who are trading pump fund coins, and I don't know who they are. Do you, like James Kristoff sends in one a week? He's like, this is gonna be a cook, and then it goes down 80%. That's my like only relationship with pump fund right now.
Yeah, no, I agree with that. I checked, I saw like their Arkham entity or whatever. Like they still have like the $1 billion of cash in there. So, yeah, like right now they're holding like 889 million of USDC, 299 million USDT, 166 million of Sol, and then I mean, it's like their Arkham entity, so it's going to count the pump they have too, but it says like 1.84 billion of pump. Yeah, it's interesting. I guess like someone's still using it. I do think it's like those things that like there's a lot of like attention tokens, right? Anytime like there's some weird new event, like people are launching titters for it. And I guess there's like people that are still trading these things. But yeah, I mean, I think they're probably doing the right thing of just shoving that all back into the token, and it seems like they're just trying to corner their own supply, and they're sitting on $1 billion of cash. So yeah, I think they're, you know, going to stay on course for this.
Yeah. With regard to your point of like how these tokens are converging, and I think this will be the last thing that we do because I need to do an ad read, and then the Eigenlayer and Layer Zero guys are going to be on. But very important. I feel like we have now, like there's the argument in early year, January, February, was there's too many fucking coins. There you like, what are you going to bid? Not the market isn't going up well enough. But now it's like there's really only like 10 tokens that you can bid. Like realistically, maybe 15. And you can like, and there's like flavor of the month, flavor of the week. If you really want to gamble on X402, you can buy that, like whatever the ping token was out there, and you could have bought that. But most of the time, it's really like only a few tokens putting in not even particularly like intense moves up. They're just grinding up like 3-4% a day. It's not like the old days where it was like Zcash and or exceptions. Clearly exceptions. Like we're in a Zottle market, or kind of not as relevant now, but I don't know. But yeah, like there's only 10-15 tokens that you want to bid, right? Max.
Yeah, I mean, also like I'd just be curious in general what percent like of all crypto purchases from buybacks, like all like the dollar amount of that and the dollar amount of like liquid capital in the space to actually bid things from like the fund side, like how do those two numbers stack up next to each other? Because like how many like dollars of buybacks has like Hype done since it's launched? If you know, I would assume it's like hundreds of millions, right?
Yeah,
like probably
like,
close to $1 billion.
It's closer to $1 billion than it is to 100 million. I think it's like 700-800 mil.
Yeah, like that alone is insane. Pump is probably, I would say Pump is probably like the second largest in terms of like dollar amount of buybacks. I actually don't know who would like come up third though. Like I feel like it kind of trickles off, and those are both like trading related apps. I don't really know anyone else who's like making a substantial amount of revenue like that.
I think there are a few other tokens. I just don't think that there are a few other protocols. I just don't think like Jupiter buys back quite a bit as well. I just don't know what it is compared to their earnings, compared to their price, like their FTV. Radium used to buy back a lot more. Now, like obviously the market's shifted on the AMM side on Solana. But Aave is a big one. Maker perpetually like undervalued based on a multiple, but seems to know, despite like them buying back. I think they're the earliest token to implement the buyback.
I think you're right. Yeah, I think they kind of pioneered that whole thing, and I think I just saw something that they're moving their buybacks from Uniswap to Hyperliquid for Sky. I'm not entirely sure about that, but I know there's like a big issue for them. Is like they were doing buybacks, but they're also supplying liquidity, and I think they fixed that a while ago. But like that was like an issue, and I think they were just trying to figure out like where can we actually get like better execution. Like right now, like there's no like flow on chain for like Ethereum L1. Like the majority of like trading over there is like Sextex ARBs. So just like retail, it's getting like rinsed anytime they try to buy like on-chain tokens over there. And like there's no like new assets over there that people want to trade. But yeah, I'm pretty sure I saw something about that, about the buybacks moving over to Hyperliquid. So that's quite cool. But yeah, they have been doing that forever. I wonder what % of the supply they own as well.
I don't know. I also need to check that. I mean, like Maker, I think all of the old remaining DeFi protocols, Maker, Aave, I saw Multicoin just published a piece about how they bought, I think it's Multicoin. I don't want to get in, I don't want to be lying on Kyle Samani's name, but I think they just bought into Ifina. I don't know how Ifina's doing in terms of like revenues and price earnings, price sales, but I imagine that's also in the camp where it's like you see. I mean, they're moving into this white labeled stablecoin idea, which I think has a much larger, and I think much riskier TAM than like than USDE, which I think it's a scary thing. People just get scared by it. I don't think it's necessarily at risk ever. Let's not say ever. You never know, but like I don't think it's at like this massive risk that people put it in. I'm sure there's people much smarter than me who can explain why it actually is, but I think it just gets discounted so heavily. Like it gets sold down so heavily when like any form of like the market sniffs out just a bit of risk in lending or like in stablecoin areas, and they're like, oh, I gotta fucking get out right now.
Yeah, I think like the best chart to watch there is like the like USDS supply versus like USDE supply. It's usually kind of like signals like risk on, risk off. I think like what Athena's doing is pretty smart, honestly, to expand beyond like a yield that's just reliant upon like funding rates, because obviously like they're kind of constrained there in terms of how much they can scale, because they also just need like market sentiment to be like super bullish for the yield to be great, and they need that to also like continue to grow over time as like USDE deposits like scale too. So I'm not sure what the stablecoin as a service is backed by. If it's backed by like their like BUIDL thing with Securitize,
it is.
I think like okay, then that like I think that's quite secure, and there's good like transparency there. So I think it's a smart move, honestly, and I hope that we see like Athena flip Circle in terms of like raw dollar amount that they hold within like the next couple of years. I think that'd be exciting because they are like a really like lean driven team, DeFi native, crypto native. And if you watch some of their tweets, it seems like that's like who they're gunning for is Circle. So it's nice to see like
you can't really gun for Tether though, because
no you can't. You can't. Yeah, there's some things better left unsaid.
I don't know if you can come for Tether, but I guess like Carlos wrote this piece and he was like long Met, and then like short other AMM tokens, and I think it played out. Oh, Ian, I'm gonna let you go. The big dogs have come in. Thank you for coming.
Can you segue me out?
Yeah, Ian, thank you so much for coming on. I really appreciate it. Have a fantastic evening. I appreciate you sharing your market thoughts as a renowned trader and analyst.
My pleasure. Thank you for having me on.
Thank you for coming on.